The looming IRS crypto crackdown is coming. It may sound dramatic, but believe it or not, it is here and it is coming fast and hard. In this video, I'm going to talk about why the IRS is now putting more focus than ever on crypto and what you can do to avoid this crackdown. Why now? Why is 2025 this important year? Well, there's a variety of reasons, but the big ones are that the IRS is going to require the issuance of a new form, a Form 1099-DA, to be issued by crypto brokers such as exchanges that report all of your different trades, swaps, exchanges, all the different taxable events to the IRS. And what this means is that the IRS is going to have more information than ever to collect taxes and to minimize the crypto tax gap. What is the crypto tax gap? Well, it's the difference between what the IRS has collected and what they should rightfully collect if everyone reports crypto on their taxes. And so the IRS is using this new form 1099-DA to be able to identify what people are actually trading and what their taxes should be. And so that's one big new change that's happening in 2025. And it's part of these new broker regulations that the IRS and the Department of Treasury just finalized in June of 2024. And in these regulations, it requires an immense amount of reporting, data gathering, data and record keeping from these different exchanges. And it will soon apply beyond exchanges to even DeFi providers, such as unhosted wallets. Not yet, but it's coming. The IRS has telegraphed it. They put it in a notice. They've said that there are going to be regulations applying to these providers as well, but not yet. But starting in 2025, the IRS is going to be getting all of this data from exchanges and other providers, such as kiosks and ATMs and other crypto intermediaries. With this information, the IRS is going to do whatever they can to close the crypto tax gap. They have made it very explicit. Crypto is a top priority for enforcement. It is a way for the government to collect more tax money and to clamp down on a group that seems to be not paying their rightful amount of taxes. So all indications are that 2025 is going to be the year that there is more enforcement than ever through these additional regulations, but also the IRS is going to have thousands, tens of thousands of additional agents and examiners who are going to have now the resources, the manpower to be able to look into more taxpayers that haven't reported. And coupled with this information and the manpower, it is a looming threat on crypto investors everywhere. Now, this might seem extreme, but the IRS has shown their exact playbook. This isn't the first time that the IRS has identified a group and then put more attention into them, which has resulted in more audits. Historically, this has happened with offshore accounts, even in the last year with high net worth non-reporters, which we've got an article on our website that talks about that as well. And if you're a high net worth and you haven't reported, you should definitely check out that video and those articles. But what we've seen through this is that when the IRS puts a group in their sights, a increase in audits follows. And we now know that crypto, there is additional focus by Treasury through these additional regulations, through these additional forms. More information is going to be received. And so exams are going to follow. So the crypto crackdown is coming, but on this channel, we're not all about doom and gloom. We're about solutions and being able to prevent further IRS issues or audits. And so what does it mean that the IRS is going to be putting more attention or more audits are going to happen? Well, typically this means that the IRS is going to use the information that they have and identify taxpayers who perhaps haven't reported properly or accurately on their taxes. But this also provides an opportunity. If you haven't reported crypto yet on your taxes, we've seen over the years, and we've helped over 1,000 different taxpayers report crypto on their taxes properly. We've seen that if you're proactive and you come forward and you report on your crypto, often by amending your return or filing an original return, in most situations, you can avoid an IRS audit. And so with this additional enforcement and additional attention on crypto, now is the time. And you might have been thinking that, well, I haven't cashed out. So that's something that comes up all the time, right? On our calls. I haven't cashed out, so I haven't reported. And hopefully, if you've been watching our videos, you know that that's not the case, that cashing out doesn't determine whether or not you need to report. But any transaction that is a taxable transaction, such as an exchange, swap, then you've got to report, not just cashing out. But those of you that are watching this and thought, no, I haven't cashed out and so I don't need to report, the IRS is going to have information from all of these exchanges. Even if you haven't cashed out, they're going to see trades as well and be able to make assumptions based on prior activity and identify people to audit. So if you haven't cashed out but still need to report, you can be proactive. You can work with a tax professional such as us to generate your records, determine the taxable amounts, and file amended returns. Not only will this hopefully help you avoid an audit or a problem with the IRS, it will also help you be in a better position to report in the future and for tax planning. When we have our tax savings consultations, one of the things that we often talk about is what are you currently holding and what's your cost basis? And so being able to go through your records and generate these tax reports will put you in a position to have this information and also start to think about tax deductions and tax savings. It's very important to be proactive, as I mentioned. And at the end of the day, using a tax professional can be the difference between reporting properly and then also reporting and having a further headache. And unfortunately, not all CPAs know crypto, and that's okay, right? There's nothing wrong with using someone to do your taxes who perhaps doesn't know crypto. But in those situations, you should use a professional to do the crypto reporting. I recorded a video recently that goes over certain things to look out for when hiring a CPA to determine whether or not they actually know crypto and if they should be the person reporting crypto on your taxes. I get it. Going back and doing your crypto taxes can be a headache and take a lot of time. But in our experience, it will be exponentially more expensive, more time consuming, and a migraine if you go through an audit and need to report then. And if you haven't reported, it is only going to become inevitable that you're going to need to report once these new regulations come into place in 2025. So to save money at the end of the day, put yourself in a better position to save on taxes in the future and in the past. It makes sense to be proactive and hire a tax professional, clean up the situation. Don't wait for the IRS to come to you. If you're looking for further information or reading on this topic, we've got a great resource on our website that includes information on why we think this crackdown is coming and what you can do to prevent yourself from being part of it. We are here to help protect crypto investors. So take this video as a warning and hopefully use it to avoid problems with the IRS. We want to keep more money in your pocket and not going to the IRS. If you think this video might be useful for someone else, please click the share button and give it a thumbs up as well. Thanks for watching. Until next time, I'm Andrew Gordon.